Hey, hi there. Ed Ponsi here, your FX educator here on behalf of FX Street once again. Good morning. I hope you're had a good weekend. Everybody here in the US is talking about golf. I didn't watch any of it. I hope it was fun though if you did watch it. The Masters tournament, everybody says it was great. I'm not a big golf person. I don't really play golf. I just hit a ball and then I look for it. I don't know if you consider that golf or not. Anyway, welcome back. This is FX Street. My name is Ed Ponsi, FX Street Premium. We'll be doing two today, so 2 half-hour, 2 30-minute sessions. So please feel free to ask any questions. I'm more than happy to answer them. So anything you like, technical, fundamental, risk management, feel free to ask away, and I'm more than happy to try to answer. I'm taking a look at the chart. We'll go to the longer term first. AUDUSD, there's been a lot of, we'll go to the daily chart. There's been a lot of red candles lately. You can see, right, we went from around 76, 75. 76, yes, around 76, 75. And that was on March 30th. And now it's April 10th. So it's been almost 2 weeks that Aussie's been falling. And it's fallen into an area of support here on the daily. So that's something of interest. And so on Friday after non-farm payroll, the initial reaction on non-farm payroll, and we'll take a closer look at non-farm payroll numbers a little bit later. But the initial reaction is Aussie USD went higher, and then it started to come down. I'll show it to you on the 15-minute. Right, is there's the wick up, right? So the initial reaction is this went higher, and then it came down. And then we saw additional selling at the London Open, right? Well, actually, this is the Asian Open. Monday morning in Asia, there was more selling. And so that's been, so it's really been pounded down quite a bit. But what I found interesting is, go back to the daily for a second. You can see that this was a pretty major turning point right in this area. Pretty major turning point. Way back in early part of March, so about a month ago, Aussie was pretty bearish and became pretty bullish right in that area at around just under 7,500, maybe 74.90 area. And so what I was hoping to get was, I was hoping to go long around 74.90, and I wanted to see if we could get an oversold signal on the hourly chart at around the same time that we were pulling into support. Maybe we could get an oversold RSI. Wouldn't that be great? On the 60-minute chart, sort of a double buy signal, right, is what we were looking for. And there were numerous buy signals on RSI, but you can see this is above. This is 75.20. So that's not what I'm looking for. 75.10, again, not what I'm looking for. And then we finally begin to get it. This is a little bit above 74.90 here. Then finally here, you're getting a buy signal under 74.90. And this was on irresistible in these areas. All right, you're finally getting. So here, what's the problem with this one here? This isn't bad. It's right around 7,500. But look at the time. It's 1,500. That's very late in the trading day on Friday, 4/7. That's 3 p.m. New York time. It's really the end of the week. It's the very end of the week. 3 p.m. on Friday. New York time is 8 p.m. London on Friday, 3 a.m. Tokyo, approximately maybe 2 a.m. Singapore, Saturday morning, 3 a.m. Saturday morning Tokyo time. And my whole point being that it's a really bad time to trade. If you're going to place a trade right here, what are your risks? You're going to place a trade late on a Friday afternoon. The spreads are going to go very wide, aren't they? You're going to hold it through the weekend, and the spreads, especially if you're not paying a commission, right? We know that if you pay a commission, then your spread is going to be smaller. But if you're not paying a commission, then the spread is going to be wider, and the spreads can get very wide going into the weekend and coming out of the weekend when we open again right here on Sunday. I mean, you could see Aussie with a 10 pip spread. and that could be very detrimental. So let's say Aussie goes with a 10 pip spread. If the trade is 10 pips against you and the spread goes 10 wide, then if you have a 20 pip spread, it's going to hit your stop. Well, that's almost not fair, but it's really, you have nobody to blame but yourself. Because you know this is going to happen. This happens every weekend. Okay? Every weekend, the spread is going to go 10 wide on some of these pairs. And so every weekend, you'd be really foolish to place a trade on a Friday afternoon late, right before the close. It would really be foolish to place a trade right before the close on a Friday. So you just simply can't do it. If you think you have a good setup and it's late on Friday, isn't that setup still going to be good when the market opens on Sunday? Probably. Let me ask you this. If that setup is no longer good when the market opens on Sunday, maybe it really wasn't that great on Friday. If it was good, if it's really that good on Friday, it can wait until Sunday. Think about it. There's no reason to rush that trade through and force it. Are we clear on that? There's no reason to force this trade on Friday afternoon ever. It can always wait. And this is a huge problem that I see, especially with people that are new. They can't seem to wait. They have to try to force a trade. And they're going to regret it. Right? So patience is something that if you don't have it, the market's going to teach it to you the hard way. Okay? So anyway, let's move on from that. right? A word to the wise is sufficient, right? So here we go. Oversold again right here. And that's what these little green markings are. These are oversold signals right here. So these are oversold, but they're not at support. Oversold, but not at support. Oversold, but not at support. Oversold, but really too close to the close on Friday. Now we're opened again. We're oversold. It's late. You know, it's like bedtime, but managed to fire it off and climb into bed. And, you know, the price comes back. So the trade goes, while I'm sleeping, trade goes positive, trade goes negative, trade goes positive. It hasn't done much. And that's okay. So where's the entry? The entry does not occur when RSI becomes oversold, and that's really what this is. It's an oversold signal. The entry occurs when RSI comes out of oversold territory. So really the entry occurs when this candle closes. The close is 7484. So really the close of this candle is the same as the open of the following candle, 7484. Right here. There's your open. So it took a little patience. Get it in. Get it in. 7484 is the entry. These are not very volatile currency pairs right now, so I don't have a really wide stop or really wide first target. And again, this is not a trade recommendation. This is all, I'm just telling you, you know, how I strategize. Just trying to explain how I set things up. But these are not recommendations. So you understand the setup. This becomes the entry. We now understand how that happened. We should now understand how that happened. Okay. We can take this line out, as this will just create confusion. And this can go. So we have our entry. We're up a tiny bit on this trade. We really have no idea if it's going to go our way. And now, one of the things we have to pay attention to is ATR. You have to know what you're trading and how much does it move. We know that right now the market has a very low volatility to it. Aussie's volatility is only 47 pips per day as of right now. That's extraordinarily low. Just look at the line dropping. That is, in fact, what you're looking at is the volatility is dropping. That's what you're seeing. The volatility has been dropping steadily. And we can go back and you can see that it's been dropping steadily for a long time. And you would have to go back to the summer of 2014, almost 3 years, to find volatility this low. It really has been a long time. Shockingly long time since volatility has been this low. And so we really have to be kind of conservative. We can't really ask too much. Correct? normally I would say, listen, this could be a target way up here. But if we're only moving 50 pips a day and a 250 pip target, when we're only moving 50 pips a day, I think is really being very aggressive. And I think I need to be a little bit more, that's asking a lot. Let's put it that way. That's asking an awful lot, wouldn't you say? I would think so. All right, so we used a stop of about 25 pips on this, which is approximately half of the daily ATR. That puts our stop right about here. And we have an equivalent first target. We have a 1-to-1 first target, which is not unusual for us. It's kind of how we roll. Our first target is 25 also. That puts our first target at about 75.10. Which is right about here. Now, just from looking at it, you can tell that it's approximately equal distance to the target as to the stop. And that's as it should be for the first target. That's pretty normal for how I trade. And for secondary targets, I see a lot of activity in this area here. That's around 75.85. Now, that's approximately 100 pips from my entry point. That's 4-to-1 target. Now, I like this area, but it's the very tip top of that area. I don't need it to be this far. I don't need it to be the very pinnacle of that area. You see this? It doesn't have to be that far away. I need to make things a little bit easier on myself because I know this only moves 47 pips a day. So why am I aiming for 100 pips? It's really, you see what I'm saying? Try to make things a little bit easier on yourself. Okay? Don't make life difficult if you can avoid it. So instead of being the top of this area, how about the bottom of this area? The same area of congestion, 75.60. Now we're 3-to-1. This makes a lot more sense to me. So I have a 1-to-1 target and I have a 3-to-1 target. So entry 74.85, I'm sorry, 74.84. Stop, 74.59. Target, let me just check the math on this, hold on. Should use the calculator always. 74.84 is the entry, minus 25, 74.59 for the stop. 74.84 plus 25, 75.09. For the target. And 74.84 plus 75 is 75.59. I put in 75.60, but it really should be 75.59. Hey, that one little pip could make a difference, right? That's why you should always use the calculator instead of just doing it in your head. One little pip could make a difference between hitting that target and missing it. So, entry, 74.84. Stop, 74.59. Target 1, 75.09. Target 2, 75.59. And there we go. And that's our Aussie setup. We did have some news on Aussie last night. So I'm going to look at it real quick. There it is. Investment lending for homes dropped pretty sharply, 5.9%. And that could have really hurt us, but it didn't. It certainly could have. Anyway. And just backing it up in case we missed anything of importance. Yeah, investment lending for homes was pretty bad. Home loans was pretty bad. And I think the Reserve Bank of Australia would be pretty happy to see those numbers down. You might recall last week, the RBA made some pretty negative statements about these different numbers, talking about a potential housing bubble in Australia. So I think that they'll be pretty happy to see those numbers down. Looking ahead, by the way, we have Yellen later today. A lot of people aren't aware of it. Much, much later today. And it doesn't, yeah, here it is. It says 7 hours and 42 minutes from now. Janet Yellen's speech. You can see it here. It's the only thing that's listed in red on today's economic calendar. So Janet Yellen is going to be speaking, but that's much later today. I'm not really worried about that. Hopefully that won't hurt my Aussie trade, which is currently still under 7,500. Hopefully my Aussie will get up to 75.09 at least before Yellen speaks, and we can take something off the table. As always in these situations, the way we manage the trade is just as important as the way we set it up. And the game plan here is if I can just make it to 75.09, I'm going to bring, we're going to take at least a portion of the trade off at 75.09. Sometimes I'll take half, sometimes 1/3. But in any case, we're going to move the stop up to break even. Okay, if we can just get to the first target. That's all. Okay, so anyway, that's how I plan to manage this one. Okay, so that's our Aussie setup for today. Going back to the calendar here. Have we missed anything that's important? I would say no. Almost everything listed here you can see by looking at the calendar. Low volatility expected. I mean, industrial output for Italy, right? Industrial output production for Greece. Come on, really? The industrial production for Greece was up 10%. You know, that could mean very little. I mean, if you manufactured, an increase of 10% could be a very small increase. If you produce very little, and then you produce slightly more, that could be a 10% increase. It could still mean practically nothing in the big scheme of things. Okay? All right. Let's continue as we move on with this. Now, what we have coming up today, also really very little importance here. Labor market conditions in the U.S. Nobody's really, is that a potential market mover? I think some people will be looking at this. Some people will be looking at it. Labor market conditions index, this is something that the Fed looks at. And this is a really cool thing. You can click right on this inside the FX Street calendar. It gives you a little explanation. And so this tells you all about it. If you want to read the official report, it's all in here. You can give the all kinds of statistics in here if you really want to dig into it. I realize not everybody wants to do that. It's not really necessary that you do that, but some people want to really dig into the information, and there's nothing wrong with that. But it is something that the Fed created fairly recently. So that they're looking at it, and that they're using it for their decision-making process. One thing that I found very surprising is that the Fed, I just found that learned this over the weekend. The Fed takes very seriously the unemployment rate, which, of course, I've considered this to be a joke for a long time. The unemployment rate in the United States is 4.5%. Which, has almost no bearing on the percentage of people that are working versus not working. But the Fed actually takes that statistic very seriously, and it's almost it's strange to consider that, but that's where we are. That's the way it is. Okay, so anyway, this is what's happening today. There's just not a lot of statistics on the docket. Friday's non-farm payroll was a disappointment at only 98,000 jobs created, but the unemployment rate actually went down to 4.5%. So it's unusual how those numbers work together. But at any rate, what happened in the end with the dollar is the dollar initially was weaker, and then it became stronger. Okay, that's going to wrap up this session. But there's going to be another session in just 30 minutes, so I hope you'll join me then. Until then, this has been Ed Ponsi. On behalf of FX Street, I just want to say thank you very much for listening. Everybody have a wonderful day. We'll be back for our second session in just 30 minutes. Thank you for listening.